A 30-year-old in America opens his phone and checks his bank account. Everything looks fine. Bills are paid, salary has arrived, life feels stable for a moment, but then something unexpected happens. A car problem, a medical bill, a home repair, something small but urgent. And suddenly, that stable life starts falling apart. This is not rare in the United States. It is a normal reality for millions of working adults. Even people with decent salaries often live in a situation where one emergency is enough to create financial stress, not because they don't earn money, but because there is nothing left after the regular cycle of spending. In cities like Chicago, Atlanta, and Los Angeles, this pattern is extremely common. People work full time jobs, sometimes earning $60,000, $80,000, or more. From the outside, they look financially fine, but inside, there is very little buffer between income and expenses. A real example comes from a young worker in Nevada who faced a simple car repair. The repair cost was not life changing, but he had no emergency savings at that moment, so he used a credit card. That decision created a new monthly burden, and that burden stayed long after the original problem was fixed. That is how small emergencies turn into long term financial pressure. Because when there is no savings buffer, debt becomes the backup plan, and debt always comes with future cost, interest, monthly payments, reduced flexibility. So over time, this cycle makes people feel like they're always catching up, never fully ahead. Another reason this happens is because modern life is structured around constant fixed expenses. Rent, insurance, subscriptions, loans, utilities. Most of a paycheck is already assigned before it arrives. So when an unexpected cost appears, there is nothing flexible left to absorb it. That is the core problem. Not income alone, but lack of financial space between income and obligations. Without that space, even normal life problems feel like financial emergencies. And because emergencies are unpredictable, people feel constant low-level stress about money, even when nothing is wrong in that exact moment. The solution is not earning dramatically more overnight. The real change comes from slowly building a financial buffer. Even a small emergency fund can completely change how stress feels, because it turns emergencies from crises into manageable events. And that shift is what separates constant financial pressure from real financial stability. In the end, the goal is not just to earn money, it is to make sure one unexpected event does not control your entire financial life.